I think as a credit analyst, we're always sort of hesitant when there's these full scale changes that happen overnight and when you've had a CEO that's only been there since March of last year. So we have just only gotten comfortable with the concept that they're giving back $20 billion. And now you have two activist investors very heavily involved, one getting a board seat and pushing out the CEO with a new CEO. That could be a positive for the company long term in terms of performance. But I do also think that shareholders might make it better than bondholders at this point.
Why do you say that? You think they're just going to maybe start returning cash to shareholders?
I think they'll get a little bit more aggressive with that, Paul. I mean, I think, it could end up being the type of thing that they look at the company and that you sort of think about ways to sort of boost the value, whether it be spin off some entity or what have you. I'm not sure what entity they could spin off at a Starbucks because so much of the non-core business has already been peeled away. That said, I mean, I think that when you're dealing with activists, you're always sort of hesitant because you say, okay, how much are they going to risk the balance sheet? How much are they going to lever to get the company into a different spot? Now, that might be a short-term pain for a long-term gain, but for bondholders, when you think about that short-term pain, that's not always necessarily the best thing. We have a long history of Yum, for example, which the new CEO was part of, when they spun off their entity Yum China, they ended up giving back so much of their money to shareholders.
Which then, to the point, begs the question, like, how is Starbucks actually doing from a bondholder perspective?
From a bondholder perspective, over the past year, they've been a little bit more volatile. We were looking at some of the recent bonds, the 2029s, for example, which are 5-year bonds, have actually tighten modestly on the news, but I think it's hard to tell. I mean, I think it's more of a question of what this means longer term from a performance standpoint. It's going to take a little while for bondholders to sort of digest this news. Something that's very clear that we've been tracking is the Alt-D, the Bloomberg second measure data.
Yeah, okay, so wait, first of all, what is this? Because I got to be honest,
sure.
I've never heard of this before, and you mentioned it. I knew you were going to talk about it, and now I'm a little obsessed with it.
It is pretty amazing, Alex, particularly when it comes to Starbucks, because the R-squared or the sort of predictive value of it is pretty great when it comes to Starbucks in particular. So what it is, it's credit card and debit card swipes only in the United States, and Bloomberg aggregates the data. You can see it both on a year-over-year basis. You can see it on an actual value basis. If you look at the year-over-year where it's trending, it's actually very much down when it comes to sales and transactions, which is not surprising because they've had a couple of sort of disappointing points, one of them being geopolitics, so the AstroTurf effort related to the Middle East. The other portion is obviously China and the fact that they really went all in on China, and it's been a little bit of a disappointment. And then you've also just had consumers pulling back in terms of their spending on things like Starbucks, McDonald's, what have you. And so companies have been trying to just get people in the door. Now, if you look at it for, transaction value, or if you look at, the placer data, which we also have embedded on the terminal, even the placer data is down. So that's estimated visits. So people physically going into stores has been down recently. And so how does the new CEO get these people back? How does he get them comfortable with the Starbucks that we used to know and love? I'm not sure.
So talk to us about China, because I know you've flagged that before. Talk to us about China and what it means for Starbucks.
I think China means a lot of things for a lot of the companies in our space. I think it's been a very common word, more so than normal, when it comes to across the consumer and leisure space. So if you listen to earning calls this quarter, anyone from Hilton to Hyatt to even the cruise lines have been mentioning China either as an avenue for growth or as a disappointment for an avenue for growth. I mean, we haven't seen the value of China. We've seen sort of this sluggish, slow growth of late. And for someone like Starbucks, that last year they mapped out their plan and they said, we're going to be building out more stores in China, and that's our international growth plan, and that's how we're getting the company back on track. All of a sudden, you don't necessarily have that. I mean, that's kind of a big problem.
Yeah, and when they talk about like strategic options for that or partnerships, what does that wind up looking like? They're not going to spin it off, right? So it's not going to be a Yum and Yum Brands, Yum China kind of situation. So how do you digest that?
I mean, it could be a Yum and Yum China situation. Who knows what's on the table at this point? I mean, we could fathom any sort of measures. I mean, most of Starbucks stores are owned, but then when it comes to international, it's a little less so. And even places like, I mentioned the cruise lines, we were on a Royal Caribbean ship a couple months ago, and they had a
always
licensed
rubs that in
Starbucks.
our face, doesn't she? She's always like, oh, remember that time I was on that cruise and it was really
Yes.
awesome? Sorry, continue.
They did actually have a collector mug for Icon of the Seas that I did buy, which was a Starbucks mug, but it was Starbucks with a bunch of Icon of the Seas stuff. I had to get it. I mean, it was 2 companies I cover. I was like, I can't.
In one shot. Well, how about on the flip side of this transaction, Chipotle? What's the outlook there? What's the feeling there in the street?
So Chipotle is an interesting one because they don't really have that much debt outstanding. So it's one that, Mike Halen really deeply covers. We a little less so. We cover it from the standpoint that obviously it's a very important player in the space. It's that fast casual. We love talking about Yum, and obviously Chipotle sort of lines in perfectly with Yum, and it's sort of that intersection between Yum and Darden, which we like talking about. And so, I mean, I think, Chipotle obviously had a lot of negative headlines. We're talking 5 years ago, in terms of safety for their food, which is obviously never a good thing. Since then, they've turned around the company quite substantially. Now, I don't know what this means when you have a darling CEO jump ship and go to another company. I'm not quite sure what we'd expect there. As of now, from a bondholder's perspective, we don't really care at the moment.
Yeah, exactly.
But I do sort of wonder what shareholders are thinking right now.